Hi, Tim Bigham back again this week, and to say the least, a historic week for Traders Exclusive. Pretty much across the board, all markets making, if not all-time highs in the case of the NASDAQ, at least recent highs, and the Dow and the S&P certainly off to the races as well. Some disappointing news on Cisco came out yesterday after the close, but markets shrugged it off with now the ECB rumored to be joining that, free money, quantitative easing sort of parade. And really that's the trade-off here. Revenues have come in very light and actually disappointed so far this quarter with almost everyone reporting. Earnings have been so-so, but the market really could care less at this point about any of the fundamental news. It really all comes down to the fact that more free money is on the way. The party will keep rolling. We have Janet Yellen, the new, newly to-be, Fed head speaking today. Certainly she is, if anyone is more dovish than former or soon-to-be former Fed head Ben Bernanke, certainly Janet Yellen is. So the market's really taking cues here and just, in my opinion, buying a little blindly, and I still remain, I hate to say it, a little bit concerned about this market. Obviously, I've been wrong so far in thinking that, this market is a little too hot. If anything, just when you think it's too hot, it gets even hotter. So, I still think caution is warranted, but caution has not been rewarded, nor is prudence. So far, over-levering and just, driving the same names higher has been the play that has been profitable. But I think a couple choices here going forward. You can either jump in here where you're looking at, next year's earnings about 110 on the S&P. So we're, approaching somewhere around a 16.5 forward multiple, which is not cheap by any stretch of the imagination. So expensive stocks that really have not had a pullback and just seem to defy gravity here, or remain sidelined or take a short position. I'm cautiously still taking some out of the money put positions with the VIX now well under 13. It seems obtuse to me that with all the debt out there in the world, all the problems that we've had, and with earnings and margins at peaks here, that the VIX can be trading down under 13, but so be it. That's the world we live in. So I am positioning for a pullback. I think the magnitude of the pullback will be bigger than any up moves from here. We may tend to grind higher. Who knows how high is high? But the one thing, if you look at stocks like, Teslas of the world, when they do fall, they fall hard. And Tesla's struggling here. That stock finally broke in the post-earnings. I'm selling out of the money call spreads on that as well, using that 160 strike out in December and January, buying the 170s as protection. I just think any upside in Tesla will be difficult from here, given the fact that momentum is breaking. Same thing on Netflix, looking at those big Momo names. Looking at DDD, a stock which, has gone straight up as well, parabolic, and waiting for that thing to finally turn over. So I think going forward, the market may head higher. We're going into a normally historically bullish period, and everyone is just ignoring anything but the fact that, stimulus continues unabated. So it's either, lead foul or get out of the way. I tend to be leading by buying some out of the money puts. I'm taking the other side cautiously, certainly position size smallly, but with the VIX at 1250, I think it's cheap, and I think the magnitude of the down move, if it does happen, will be big. So I'm really just looking at this as a probabilistic trade, and again, trading's all about probabilities, not certainties. I have no idea how high is high, but one thing I do know is that it's pretty high right now on any kind of metric. So until next week, this is Tim Bigham. As always, especially in this market, keep those position sizes in place and those stops going. Take care.